Let's see. I'll be with you guys now. I just want to make sure I'm seeing the comment section right here. Just want to make sure I'm seeing the comment section. Okay. Let me use the one that is quicker. That is actually quicker. Good evening, everybody. Good evening, everybody, and welcome. Let me just sort this thing out. 2 seconds. Okay. I'll be with you guys now. Good evening, everybody. Good evening. Hoping you are all good. We're just waiting for more people to join. So far, kindly let me know how you're feeling today. Kindly let me know how you're feeling. Are you ready for today's session? Are we all ready? Can I get the comments coming? Can I get the comments coming? Good evening, everybody. Good evening, everybody. Hi guys, let's get the comments coming. Are you ready for today's session? Are you ready for today's session? Are you all good? Your volume is very low. Is it still low? Kindly let me know if you can hear me loud and clearly. Is it still low? Kindly let me know if you can hear me loud and clearly. Kindly let me know if my voice is still low. I'm looking forward. Let's go. Can you kindly confirm that you can hear me loud and clearly before I even continue? Can you kindly confirm if you can hear me loud and clearly? Still waiting for people to confirm. Still waiting for people to confirm. Okay, loud and clear, a bit low. What changed? Clear, loud and clear. Alright, so since the majority of the people are saying my voice is loud and clear, I'll take it as if it is really loud and clear. So, good evening, everybody, and welcome to today's session, which is the second session. I know that we had problems with the previous sessions. We are really, really sorry, but today we tried by all means to fulfill our promise. So, in that being said, don't mind me if I keep on looking at this phone and this phone. Don't mind me if I keep on looking at this phone and this phone. Sometimes, like, this one is faster than this one, so I'm able to read comments quickly. Don't mind me if I'm using both. So, today's session we'll be going through essential trading instruments. Essential trading instruments that you need to use whenever you have to execute a trade. Last week we went through support and resistance, trend lines, and things you need to consider before even executing your trade. So this will just be an add-on. It is an add-on. So as we did last week, if you have questions, just feel free to ask those questions under the comment section, and I'll try by all means to answer your questions. And don't mind me if I pause a bit to listen or to check for questions, because like there is a time difference between me speaking right here and also you guys getting to hear me out there. There is like a 1 minute to 2 minute gap, so sometimes I'll just be quiet a bit, just understanding, and they're still with me. So yeah, so without any further waste of time, let us go through today's lesson. Disclaimer: any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. Okay, sorry, let me just turn on this phone and reconnect. Okay, we're good to go. All right, done. Speaker right here in front of you guys is Tiran, the gold of experience. I'm a mentor and I consider myself as the best female trader in Africa. I provide simplicity in the Forex market. I've attended a lot of seminars as a guest speaker on the simplest profitable strategy. That's what I've attended. So I'm glad you'll now know me. I won't have to introduce myself again. So yeah, let us move on. And us moving on, so today we'll be covering the following topics, which is: what is a trading strategy, step-by-step guide to building a trading strategy, indicators, how indicators may impact your trading, what is MA, how to use it, and then we'll be moving to the practical side of everything. Are we still together on that one? Can I get a thumbs up if we are still together? Can I get a thumbs up if we are together? Thumbs up. Okay, still waiting for the thumbs up in order to confirm that we are still together. Can I get a thumbs up? As I said, don't mind me if I kinda wait for a while as we have a time difference. So I'm still waiting for the thumbs up in order to see or confirm that we are still together. Let's get those thumbs up coming. Okay. Wow, miscommunication. What do you mean by miscommunication? Right, I explained that the time difference between me and you guys is quite like 1 minute or 2 minutes. So it's why I'll kind of wait a bit, you know, because sometimes as I move on to the next slide, you'll be seeing the previous slide at that time. So kindly bear with me, It's something that is not approach the market or determine when to remain neutral, when to buy or sell financial instruments such as stocks, Forex, commodities, and when to close trades. Traders choose strategies based on their objectives, risk tolerance, and preferred trading style. So, in simple terms, I can say that a trading strategy is how can I put it? A trading strategy is a set of rules that you have for yourself. It is a set of rules that you have for yourself, or I should say, is a guidance that will guide you on when to take trades. Because you don't just take trades just because price is going up, or you don't just buy because price is going up, or you don't just sell because price is going down. Therefore, you need a method to follow in order for you to be profitable. So each and every trader has their own trading strategy, a strategy that will suit their trading style, their trading personality, and so on. As they usually say that what works for me might not work for you. You might want to try out my strategy only to find that it won't work for you because we are different as people. A trading strategy goes along with your personality. You're still going to understand more about that. What do I mean when I'm saying that your trading strategy goes more with your personality? So if we are still together on what is the trading strategy, can I kindly get 100%? 100% now so that I can see that we are still together. As I explained, that a trading strategy is a guidance that guides you in you executing your trade. Before you execute your trade, you have to have reasons backing up that trade. For example, if you want to activate your buy, there has to be a reason for you to take that buy. So a trading strategy helps you in such a thing. As you definitely know that Forex trading is all about analyzing or checking the rhythm, the flow, or pattern of price action in order for you to come out with a trade. So if we are still together on that one, can I get 100%? 100% to say that we are still together. 100%. Can I get 100% to show that we are still together with what is a trading strategy? Can I get 100% to show that we are still together? Let's get 100% coming. Let's get 100% coming. Okay, still waiting for those 100%. Okay, so all right. 3 people have confirmed, so definitely we are together. Let us move on. So in us moving on, now we will be going through step-by-step guide to building a trading strategy. step-by-step guide in building what? In building a trading strategy. So now we will be choosing I'll be assisting you with choosing your trading style. So your trading style is based on how long are you willing to hold trades. That's how I can put it. It's based on how long are you willing to hold trades. So let us start with a scalper. A scalper trader is a trader that takes numerous trades aiming to profit from tiny price movement, which is a trader that is just in and out of the market in less than minutes, or I should say in minutes. A scalper is a trader that takes numerous trades aiming from tiny price movements. In that being said, they're just in and out of the market. They're not holding for a very long time. They're just in and out for a few minutes. That's a scalper. A day trader involves short-term trades taken and closed on that same day, which simply means that day traders don't like holding trades overnight. They don't like holding trades overnight. They'll just be analyzing in the morning, or they'll be monitoring their trades throughout the day. So that is what is a day trader. And then going to a swinger. A swing trader is a trader that is able to hold positions for several days or weeks. Which this type of trader is a trader that has limited time, that can analyze for that specific time and not be able to monitor those trades during the day and so on, So that's what is swing trader. Going to a position trader, it is a long-term approach, holding positions for months or even years. That's a position trader. So if you feel like as being a scalper is too quick for you and being a swing trader is also too fast for you, then being a day trader is quite a good trading style for you. It is quite a good trading style for you, because being a scalper, as some people, it's like it goes with the personality of a person that is impatient. For example, if you're just impatient like me, you are more of being a scalper. Can I get people to comment if it makes sense? Can I have thumbs up so that I'll use everything? Can I get the thumbs up? Thumbs up. To confirm that everything makes sense. Can I get a thumbs up? Can I get a thumbs up? Still waiting for the thumbs up. In the comment section, still waiting for the thumbs up in the comment section. Let me put this phone here. Please slow down. All right. Sorry about that. If I'm quick, I'll just repeat this. So, choosing your trading style goes along with how long are you willing to hold your trades. So, there are 4 different types of traders. There is a scalper, there is a day trader, there is any price movement, which simply means that they are in and out of the market in minutes. They are not holding for a very, very long time. And then a day trader involves short-term trades taken and closed on the same day, on the same trading day, which simply means that day traders don't want to hold trades overnight, meaning hold a trade till the next day. They don't want to do that. No problem, I'm repeating. They don't want to do that. Those are day traders. Day traders have limited time, meaning that actually they don't have limited time. It's swingers that have limited times. Day traders are able to monitor their trades from morning. They have time to analyze and monitor their trades throughout the day. That is a day trader. And then going to a swing trader. A swing trader is a trader that holds positions or trades for several days or weeks, which those types of traders are people that don't have enough time or don't have much time when it comes to like having to be full on the market. So that they have that portion or that small amount of time to just analyze and then place their buy limit, sell limit, sell stop, buy stop, and then they're good to go. TP and stop loss set, and then they're good to go. You know, they don't have much time to be on the market and analyze or monitor their trade throughout the day. And then we have a position trader. A position trader, long term. It is a long term approach, holding positions for months for you. Then day trading will be suitable for you. As I said, that having your trading style, it goes along with your personality. For example, me personally, I'm someone that is not patient. I'm impatient scalper, because in most cases I'm usually in and out of the market. Hoping now I was slow. And then set risk management parameters. Determine your position size. Lot size based on your risk tolerance and your trading at risk or lose before using. That will assist you in not losing your account at first go. So have your risk management parameters on set. Know how much you're willing to risk or lose before even executing a trade. Not once you are in the trade, but before you even eat. Hoping. Can we now move on? Can we? It's also lagging on my. Why? I wonder why. Ngidlala kuyinamba e-right at least akufani. Ngithi idlala kuyinamba e-right. Ayikho stable mara ingcono kuneyami. Okay. Alright, so just check if we now live. Okay, seemingly everything is now okay. Kindly confirm. Just send a thumbs up to confirm that we are now okay. Kindly send a thumbs up if we are now okay. Please send a thumbs up. There you go. Can you kindly send a thumbs up if everything is now okay? Kindly send a thumbs up so that we can continue. We can hear you loud and clearly. Okay. Let us get more people to respond. All good for now. Alright. Let us get more people to respond. Okay. Let me just tell the rest of the ladies to join since they were already out. Let's join, ladies. Be up and running. Okay, 20 people have joined. Let us just wait for more people to join a little and then we will start from there. Let's wait for more people to join. I'm here. All right, people are coming in. All right. All right, let's just wait for more people to join. At least if we can have 30 people, then we're good to go, as the session will be recorded, so others will just find us along the way. Apologies for the inconvenience, guys. Apologies for the inconvenience. Yeah, all right. All right. So we'll just begin. Since the session will be recorded, we will just begin as time is kinda against us. All right. So I'll just start again from where you missed, which is from the content going forward. So today we'll be going through what is a trading strategy, step-by-step guide. All right, step-by-step guide to building a trading strategy, indicators, how indicators may impact your trading, what is an MA, how to use it, and the practical side of it. So those are the topics we'll be going through right now. So let us continue. If you can't hear me, just let me know. Don't worry about the picture. let us focus on the sound and the slides. All right. What is a trading strategy? A trading strategy is a set of rules used to approach the market or determine when to remain neutral, when to buy or sell financial instruments such as stocks, Forex, and commodities, and when to close trades. Traders choose strategies based on their objectives, risk tolerance, and preferred trading style. So, in simple terms, what is a trading strategy? A trading strategy acts as a guidance to you when it comes to you opening your trade. It helps you to know when and why to open that particular trade. You don't just open, or you don't just buy because price is going up, or you don't just sell because price is going down. But you have to have a guidance that tells you that we only sell when we are seeing this in the market, and we only buy when we are seeing this certain thing on the market. So kindly let me know on the comment section if you got that, so that we can continue. Kindly let me know. As I said, that our time difference is almost like 1 minute to 2 minutes. So don't mind me if I keep quiet waiting for you guys to respond. So I want to make sure that we are together before I even move on to the next slide. Kindly confirm. Kindly confirm. Can I just get thumbs up to confirm that everything was clear in what I just explained when it comes to a trading strategy? All right, got it. Thank you. So the next section or the next slide is us learning step-by-step guide to building a trading strategy. So this is a guide that will help you build your trading strategy. Your trading style will be based on how long you are willing to hold your trades. So we have 4 different types of traders, which is a scalper, a day trader, a swing trader, and a position trader. So a scalper is a trader that takes numerous trades aiming to profit from tiny price movements, which in simple terms, a scalper is a trader that's just in and out of the market in minutes. They don't hold for a very long time. That is a scalper trader. So if you are just impatient, just like me, then you are most likely to be a scalper. And then next we have a day trader. A day trader involves short-term trades taken and closed on the same trading day. Day traders don't want, or they don't like holding trades overnight. Hoping that makes sense. With day traders, they don't hold trades overnight. They just hold trades for a specific time, which is not the whole day, which is like overnight. So in simple terms, also a day trader is a trader that has time to analyze the trades, or to analyze price and monitor those trades throughout the day. And then we have another type of trader, or another type of trading style, which is a swing trader, which is holding positions. A swing trader is a trader that holds positions or trades for several days to weeks. Those type of traders are traders that aren't able to analyze for the whole day or monitor their trades throughout the day. They have just a tiny or a small portion of time to just analyze and put their sell limit, sell stop, buy limit, buy stop loss, and take profits, and then they're good to go. They don't have a long time to analyze, monitor the trades throughout the day. Those are swing traders. And then lastly, we have position traders, which are traders that hold long term, holding positions for months or even years. So if you feel like being a scalper is too quick for you, or being a swinger is too slow for you, you can be a day trader. Can we get that one also? If that was straightforward. I wasn't quick this time around. Hoping I wasn't quick this time around. Can we move on? Can I just get a thumbs up if we can move on? 1 or 2 people to confirm that we can move on. I just need 1 or 2 people to confirm that we can move on. I just need 1 or 2 people to confirm that we can move on. Let's see. All right. Set risk management parameters. Determine your position size, lot size based on your risk tolerance and your trading account size. So in simple terms, you gotta know, or you have to know, how much you're willing for even executing a trade. Not that you have to execute a trade first and then you analyze from there that, okay, I'm willing to lose this much when it comes to this trade. You have to set parameters for your trade. So which simply means that know how much you're willing to risk or lose in a trade before even executing it. So that is what they mean when it's when they're speaking about setting parameters, risk management parameters. That is all they're talking about. I think that one is straightforward. So moving on, managing your emotions. Trust me, wherever there is money, there's always emotions involved. It can be the emotion of fear, greed, hopes, or even involved. So this is what will assist you when it's come to explain that wherever there is money, there's emotions involved. Stick to your predefined rules and avoid impulsive decisions driven by fear or greed. Remember that no trading strategy is foolproof or even perfect, which they simply mean that there's no strategy that is 100%. And losses are naturally part of trading. We don't fight for perfection, but we fight for progress. It's essential to continuously learn, refine, and adapt your trading strategy over time. So that's how, or that is what will assist you when it's come to managing your emotions. As I said, that wherever there is money, there's always emotions involved. So in Forex, we have a few emotions involved, which is the fear of missing out. You'll want to rush to enter a trade because you don't want to be left out of that trade. You'll have the emotion of regretting. I wish I could have entered this trade. I wish I could have exited early. The emotion of greed, whereby you overheld trades with the hopes that they were still going to go in your direction. And the emotions of hopes, holding on a losing trade, whereby you still think that price has high chances in going in your direction while it's just way out of your direction. That is what they mean about when they're saying manage your emotions. And then number 4, develop an entry and exit criteria. Know what are the things you need to consider before entering your trade, and what are the things you need to consider before exiting your trade. Have clear rules for entering and exiting trades. For example, sell once the price is at resistance, or buy once the price is at support. The rules will also assist you in not to chase the market entering too early or having FOMO problems, which is a fear of missing out, which is the emotions I just mentioned in number 3. So in order for me to continue to the next slide, kindly let me know that we are still together by giving me 100%. Can I get 100% if we are still together with that? Can I simply get 100% before I even move on? Can I get 100%? Patiently waiting for those 100% in order for me to continue. In order for me to continue, can I get those 100% coming? I need 1 or 2 people to confirm, and then we good to go. All right. Amazing. Okay. One more person so that I'll know that we are speaking about this slide. As we said that we have a time difference between me and you guys. It's about 1 to 2 minutes. So yeah. Can I get the last person to confirm that we're on the same page? Can I get the last person? Good. All right. And then lastly, backtest your strategy. Backtesting is a general method for seeing how well the strategy or system would have done or played out using historical data. When backtesting, you use the same strategy, risk parameter, and entry and exit criteria you will use on live chart. You have to record all trades taken and be honest with yourself. Record your win by saying that backtest your strategy. In Forex, it's even nicer because you're able to backtest what your trading strategy and all of that to improve your profitability until you approve that strategy, and then that's when you can go on your live account once you have approved your strategy. So backtesting is actually analyzing previous data using the same risk parameters, using the same strategy, exit and entry criteria that you are going to use on your live account. So until you are profitable in you backtesting, then that's when you can move to your live account. So in that being said, you gotta be honest with yourself. Just make sure you write down all your losses, all your profits, everything you faced, even the emotions you faced when holding a trade and all of that. So there is another mistake that is done by a lot of beginners. Whenever they're opening a demo account, they'll be opening a demo account with almost like $100,000 as if they'll be funding with $100,000 when they are starting with their real account. So you gotta be realistic with yourself at by all means, or at all costs. You gotta be realistic with yourself. You should start at a minimum demo account that you definitely know that when it's time for you to fund your live account, you will definitely fund with the same amount as backtesting, demo trading. Yes. So you'll be backtesting on your demo to approve your strategy, to improve your profitability and approve. After you've approved everything, and then that's when you can go to your real account. So that's even what's nice about Forex. Unlike other career choices whereby you learn as you go, there's no reversing. So in Forex, you are able to backtest or learn through a demo or previous data in order to have a profitable strategy to use on your live account. So let us move on. And us moving on, we have indicators. What are indicators? Indicators are squiggly lines that are found above, below, or on top of price information on the chart. Indicators can help you identify signals and trends in the market based on the patterns that have been tracked over time and calculated mathematically. Those are indicators. Indicators sometimes help you to know the overall trend and to know at where your high is at where your low is at. So they assist you with that. Yes, backtesting using a demo. Yes, definitely. So, in continuation, how indicators may impact your trading journey or your trading? Indicators may make it easier to point towards potential price reversal, direction, and momentum of price movement, which is what I was explaining, that they may assist you to be able to spot your trends easily. They may assist you also to be able to spot your reversals, if not your reversals, the momentum of price, on how strong are the buyers or how strong are the sellers when it's come to the Forex market. Can I get a thumbs up if we're still together on that one before I even move on to the next slide? Can I get a thumbs up? Can I get a thumbs up? Can I get a thumbs up? Can I get a thumbs up to see that we are still together? And then I can move on to the next slide. If there's any questions, you just feel free to ask those questions. Mind you, I'm more of a pure price action trader. I don't use indicators when it comes to trading. At the same time, I just thought I had to teach you other ways that you can confirm your entries. There's quite a lot of indicators you can use, but we'll be going through one. As I said, that I'm more of a pure price action trader. I believe in pure price action more than indicators. So you'll kindly bear with me when it comes to that one. All right. What is MA? MA is simply short for moving averages. So indicators is an extra confluence. Yeah, it's just a cherry on top of the cake. Please answer the first question we sent earlier on after the session. What question was that again? What question was that again? Obviously, I forgot. Kindly remind me of the question. So what is MA? MA is short for moving averages. It indicates the average trend within the chosen period, smooth out price action, and filter out the noise. That is a moving average for you. The most commonly used moving averages are simple moving averages, which is SMA, which indicates the average movement of price during a particular time and period or time period. Exponential moving averages, which is EMA, is similar to SMA but applies a greater weight to more recent prices. So as we'll be going through one indicator, which is simple moving averages, as I said, that it adds as a confluence to your entry. It is an extra confluence, as it is an extra confirmation. Also, as I said, that I'm more of a pure price action trader. I don't believe in indicators and I don't even use them. But at the same time, what works for me might not work for you. What worked for you might not work for me. So it's just good to just know everything. It's just good to just know everything. So how to use moving averages? You can add moving averages to your chart simply by, okay, with these steps, you need to log on. You need to log on your, you need to either log on your Octa app, if not Octa app, the Octa website. And then these are the steps you'll be following. These are the steps you'll be following right here, which on our next slide, it will be showing the more of steps in a picture format, I can say. So you click the indicators list icon in the toolbar, select moving averages, choose the period and the type of moving average you want to work with. If you're using multiple moving averages, you can change the colors to identify them easily. So as I said, that now we'll be seeing some sort of a picture. You go on your Octa website. You are able to download this MetaTrader platform for Octa. It's even much simpler, as it has as it has all the steps. So far we'll be using TradingView, but you have to use the Octa one. So click the indicators list icon in the toolbar. The toolbar is right here. You click the indicators list. After that, you select moving averages. So navigator, under navigator, you click on indicators. After indicators, you move on and so on. Trend, from trend, moving averages. After moving averages, that's how you add step 3. Choose the period and the type of MA you want to work with. So there are a lot of periods that can be used. It's up to you on which one works for you. As I said, that I'll be teaching you one method of using indicators. As I say, I repeat, I don't trade using indicators. I'm more of a pure price action trader. But at the same time, as I said, what works for you might not work for me. At the same time, what works for me might not work for you. So it's all about me having to teach you everything, and then you'll have to combine everything, and then you'll see what works for you and what does not work for you. Let's continue. All right. Practice analyzing support and resistance combined with your moving averages on the practical side of everything. All right, so now let us move to our trading view. If you remember correctly, we had analyzed Euro USD and predicted that price has high chances in coming back to test this level before even going to the downside, which we can definitely see that it's still going along. It's still going the way we had predicted. It's still exactly going the way we had predicted. Let me just zoom out. Sorry, my network. All right. How to set lot size, stop loss. How to set lot size, stop loss, and take profit, struggling, especially with the Octa app. All right. So when it comes to stop loss and take profit, can you kindly watch the previous video? And then when it comes to lot sizes, I'm not sure if it's possible for us to do a video based on that, based on entries. but we'll definitely speak about that, because right here I can't show how you can put your lot size, how to set lot size. But definitely at the same time, you can also check on the Octa website. As I said, that there's free educational content right there. They explain everything. If there are some things that are missed out, you can definitely find them from there. At the same time, as I said, that we'll kindly communicate and see if we can do a video on how to put your stop loss on your MetaTrader, how to put your take profits and lot size. Yeah. So right here, we are looking at Euro USD. These are the trends we have spotted last week. As we spotted our trend, just to memorize everything, or just to refresh your mind and remind you on what we spoke about. We spoke about that a trend line is a series connecting highs and lows. And that being said, a trend line is made up of a minimum of 2 or more touches. We have 3 types of trends, which is our uptrend, downtrend, or sideways trend. And I said we don't want to trade a sideways trend, but either an uptrend or a downtrend. And then we spoke about support and resistance, whereby support supports price and going up, and resistance price from not crossing above but to go to the downside. And then I explained that whenever we are above a certain level, that level right there can be considered to be our support, and whenever we are below a certain level, that level right there can be considered to be our resistance. And then we also spoke about a point of confluence, whereby a point of confluence is whereby you are resisted or supported more than once. Do we need use a position size calculator? Yeah, you can still use it. At the same time, it's not always needed, but you can still use it. So as I was still explaining, now I'll just be adding on what we spoke about. As I've explained that last week we covered trend lines, support and resistance, entries, and we had predicted that Euro USD has high chances in coming to touch this resistance of ours, which is our resistance trend line and our resistance zone, which will be at a point of confluence. Why will it be at a point of confluence? It is simply because we will be resisted more than once with our resistance trend line and our resistance zone. It's why we're predicting that there are high chances of price reversing from here. Now let us add another confirmation, which is now our indicators. We'll go on indicators, then search moving averages. We'll go on indicators, then simple moving average. We'll click on it for it to be added. So far, can I get people to ask questions? I logged in late. Can I still watch the video later? Yes, you'll definitely watch the video later. So right here, when is the right time to close profits, or would I know it's gonna go lost profits? All right, you can never predict that price is going to go on losses or it's going to go on profits. As I said, that we spoke about trend lines, we spoke about support and resistance, and now we are adding on indicators that adds or act as an extra confirmation to having a stronger entry. So in that being said, as we spoke about, that Forex is all about having the rhythm and the flow and the pattern of price. So you gotta see how price is moving in order to understand where we are going. So in that being said, it's why I once made an example that, let's say for example, we have a circle, a square, and a triangle. A circle, square, triangle. And then after that, we have a circle and a square again. What's the next shape? It's definitely a triangle. Why? Because you looked at the previous rhythm, at the previous pattern, at the previous flow in order to understand what was the next shape. If there wasn't the next shape, if we only had a circle, square, triangle, you wouldn't know what's the next shape because it wasn't a repeated thing. It wasn't a pattern. It wasn't a flow. So maybe it could have been a star. It could have been a diamond and whatsoever, until something is repeatedly more than once, or I should say twice or more. That's when we can consider that now this thing is a pattern, this thing is a flow, or this thing is what's this thing? Yeah, is a pattern, sorry. So yeah, that's when we can consider such. Can price touch resistance and support more than 5 times before it can change? Yes, it can. Yes, it can. So, as we had predicted, that price has higher chances in coming to test our resistance right here, our two resistances. Now we have added our simple moving averages. So if we are looking at our simple moving averages, we can definitely see that whenever price is now going to the downside, or now price is about to change direction, we see our moving average or our jiggly line going above it, above our candle. As it is going above our candle, simply shows that now price has higher chances of changing direction and going to the downside. As you can see, whenever we are buying, it has been going below our candlesticks. It has been going below our candlestick, and as soon as price is about to change direction, you see it going on top of candlestick and changing the direction, or changing the position to be above our candlesticks. Moving on to the next example right here, we can definitely see that we bought, but right here our moving average made what, or moved to the other side. In it moving to the other side, it was now above. As it is above, it was signaling what? It was signaling that now we are changing direction to move to the downside. Until it crosses, that's when you can predict, okay, there are high chances that now we are changing direction. At the same time, as I said that I don't believe in indicators. Why don't I believe in indicators? It is simply because they need to be modified every now and then, depending on how price movement is going. So can I get a few questions based on the moving average, and then let us now get into my strategy, I can say. Okay, let's see. When is the perfect time for trading? During the day, before, end of the business day? There's no perfect time for trading. There's no perfect time for trading. Every time is tea time. So, but if you could ask your question like this, when are the most volatile times whereby the market will be moving much faster than it usually does, or than right now? Then that question I can answer it in this way, that around in the morning, usually at New York session, at London session, actually London open, London close, New York session, and New York close. So those are the most times whereby price will be quite volatile. They'll be moving quicker than they usually be moving. So in answering that perfect time for trading, there's no perfect time for trading. Yes, Andilicious, you are getting answers, and you will be watching the video later. Can all trading style use the same? Can all trading style use the same? Okay, there's something I can't see right here. Use the same leverage and lot size, or each style requires its own leverage and lot size. All right, when it comes to the leverage and lot size, I can say it goes along with your risk appetite. How much are you willing to risk? And what can you afford to lose? And that being said, some people might be comfortable in risking 1%, while some are comfortable in risking quite a lot. It goes with your personality also, on what you can handle. How fast is a moving average? I don't understand your question. Hi, do you trade gold? Can you show an analysis with trend lines, please? Unfortunately, I can't. But yes, I do trade gold. I do trade gold. The reason I can't share the analysis at this time and moment is because I don't want to be overcrowding other people that are still new and don't know what's going on. One times are the London session and New York session. London Open is at 9 a.m. 9 to 9:30 a.m. It's around there. And then New York Open, I'd say it starts from around 2:30. All right. So now, in us moving on, as I said that I'm more of a pure price action trader than an indicator trader. I don't use indicators. But let us now use all the confirmations. In us using confirmations, we can definitely see that we are in an overall downtrend. In us being in an overall downtrend, we have been breaking structures to the bottom. Breaking structures to the bottom, creating a series of what? Of lower lows and lower highs. Creating a series of lower lows and lower highs. And that being said, we impulse to the downside and correct to the upside. So in that being said, in a downtrend, we have two movements. We have our impulse and our correction and our corrective move. So our impulse move is our longest move, or the movement that goes along with the overall trend, while our corrective move is the one that opposes the impulse. So in that being said, we will be creating a series of lower lows and lower highs. Lower lows and lower highs. In our downtrend, what's our longest movement? Our longest movement is our sells, and our shortest movement is our buys. So we're looking forward to doing what? We're looking forward to hold longer when it comes to our sells, which simply means that we're looking forward to swing our sells and scalp our buys, to hold, like, we will be in and out of buys. We will be in and out of buys when it comes to our downtrend. So in this case right here, what would I do as a pure price action trader? As a pure price action trader that will be using a strategy of trends in trend, I'll simply draw my trends as I've drawn my downtrend, and then from there I'll also look for another trend within. As I'm looking for another trend within, we can definitely see that it has quite multiple touches. Right here, it was a fake out. What is a fake out? It's when price breaks a significant levels, then goes back within it. And then let me just clone this. In me cloning this, we can definitely see that price is moving correctively to the upside. A correction is simply a loss of momentum to whichever side price is correcting towards. A correction is simply a loss of momentum to whichever side price is consolidating or correcting towards. So at all times in a downtrend, we want to see price correcting towards the upside, showing a loss of momentum on the buyer's side, which simply means that the buyers don't have enough power or enough control when it comes to the market. They don't have enough power in pushing price to the upside. Therefore, the sellers are the ones that are in control. So right here, I can definitely see that there is an inner structure. As much as we can see the big downtrend, inside our big downtrend, we have what? We have our small uptrend. In our small uptrend, what do we have? We have a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So in order for us to confirm that we are still going to the upside, it is for us to continue breaking highs, to continue breaking the previous highs. That's what confirms that we're still going to the upside. It is for us to continue breaking structures to the top or breaking previous highs, which these are our highs, breaking our highs, breaking our highs, breaking our highs. So, and then in order for us to confirm that now we are changing direction, it's whereby we check for the higher low that gave rise to the last higher high. So this is the higher high. And this being the higher high, what gave rise to this higher high? It's this higher low. Why? Because without this higher low, we wouldn't have had this higher high. When then we have the next higher high. What gave rise to this higher high? It's this higher low. Why? Because without this higher low, we wouldn't have had this higher high. okay, we have this higher high right now. What gave rise to this higher high? It's this higher low. Why? Because without this higher low, we wouldn't have had this higher high. Therefore, in order for us to confirm that now we are changing direction, it is for us to take out or to break the higher low that gave rise to the last higher high, and then we retest, which a retest is whereby we break one significant level and then come back to touch that same level. We retest and then we continue pushing to the downside. That's when we can confirm that now we are changing direction. In an uptrend, it's whereby the higher low that gave rise to the last higher high is broken or taken out. And in downtrend, it's whereby the lower low that gave rise to the last lower high is taken out. So let us make an example of, can you please use a pointer? Let us make an example of a downtrend. We are almost done. Let's make an example of a downtrend. Let's say we have our downtrend right here. Let's say we have our downtrend, and us having our downtrend, we are having a series of lower lows and lower highs. Lower low, a low that is lower than the previous one, lower high. We keep on breaking structures to the bottom, lower low and lower high. In order for us to confirm that we're still going to do downside, is for us to break the previous low, which is this low right here, lower low. So in each and every low created, there is a lower high behind it. There is a lower high that gave rise to it. So this is our lower low. What gave rise to this lower low? It's this lower high. This is our next lower low. What gave rise to this lower low? It's this previous lower high. This is our next lower low. What gave rise to this lower low? It's this previous lower high. And this is our last lower low. And it being our last lower low, what gave rise to this lower low? It's this lower high. In order for us to confirm that we are still going to the downside, it is for us to break this lower low and not break the lower high. And then in order for us to confirm that now we are changing direction, it's for us to break the lower high. Sometimes it can be that we break a trend and then we go within. So avoid those mistakes. So in order for you to confirm that we are changing direction fully, don't look at the break of the trend without the lower high being taken out. Look at the lower high being taken out, and then you wait for a retest from there, and then we continue pushing to the upside. That is a sign of our change of direction when it comes to a downtrend. While our uptrend, our sign of a change of direction, it's whereby our higher low that gave rise to the last higher high is taken out, as we are creating a series of higher highs, higher lows, higher highs, and higher lows, higher highs, higher low, a high that is higher than the previous one, and a higher low. In each and every high created, there is a higher low that gave rise to it. So this is the last higher high. What gave rise to this higher high? It's this higher low. In order for us to confirm that now we are changing direction, it is for us to break the higher low that gave rise to the last higher high, retest, and then that's when we can say now we are changing direction to push to the downside. Let's get some questions in the time that is remaining. Let's get some questions. Let's get some questions. Let's get some questions. Are we still together? Was that clear? Was that clear? Was that clear? Was that straightforward and clear? So that was just an add-on when it comes to what we have learned. So we learned how to spot our support and resistance, trend lines, added our indicator, and then right now I just added your confirmation when it comes to a change of direction sign. It's whereby the higher low in an uptrend, the higher low that gave rise to the last higher high is taken out, or the lower high that gave rise to the last lower low is taken out. All right, can I get some questions? Can I get some questions? We have less than 10 minutes remaining. Can I get some questions? So after the 4-hour higher high, usually price breaks to the opposite direction. I don't understand your question, Lerato. I don't understand your question. Clear, perfect. Okay. Can you elaborate your question? I quite not understand your question. I kind of not understand your question. Anile Shezi, we have a Telegram group whereby all questions are sent there and then we answer as soon as possible. Even if you watch the session or you watch this video after the live, you are able to ask the questions under the Telegram group. This is a Women in Forex movement. This is a Women in Forex campaign, I can say. So we have a Telegram group where communication takes place. That's where you can ask your questions. So if we don't have any other questions, I guess I can move back. Okay. Since we don't have any other questions. So use my personal promo code until the 31st of August to double your deposit if you are ready to trade on your live account. If you feel like everything we've learned is good for you. As I said, also you need to back test before you go on live account. After the fourth higher high, does price create a reversal? No, it's not about the fourth higher high. It's not about how many higher highs. Miranda, you making me laugh. I don't want to laugh. It's not about the number of higher highs. No matter how many higher highs can be there, the minute you break the higher low that gave rise to the last higher high, that's when you can consider a reversal, not the number of higher highs. The higher highs can be more than 5, 10, 15. For the mere fact that you haven't broken the higher low that gave rise to the last higher high, then that's when we cannot consider a reversal. But once we have broken the higher low that gave rise to the last higher high, that's when we can consider what's this thing called our reversal. I'm still asking which Andy this is. I don't know, guys. Thank you very much for participating. Our next session is on Friday. Yes, our next session is on Friday, which is the 17th of May. Hoping we won't have technical issues by then. Apologies today also for the inconvenience. I'm really, really sorry. What's the difference between smart money concept and price action strategy? It's two different strategies. That's what I can say. Smart money concept, according to me personally, I can say it's more of a refined strategy when it comes to your entries. That's what I can say when it comes to smart money concept. Is Octa live accounts available on MT5? It's available. Open a live account firstly on your Octa platform and then you can trade, or you can just use the Octa app. Everything is available right there. If you are new in the industry, you don't know anything about trading and you want to becoming a trader, what exactly that you need to do to understand and how much you must have. You can have as little as 100 Rand if you have the right skill. Kindly go through the previous video we have went through in order to understand how to enter trades, how to trade, and also visit the Octa website whereby they offer free educational material right there. On Telegram group, please, I'm willing to learn as well. All right, the Octa Telegram group, kindly send a message on Instagram. Yeah, I think the link also is on my bio or the Octa bio. You can share it right there and then join from there. Okay, they just dropped the link. Kindly click on the link below and then you can join from there. Nonetheless, this is Tiran the GOAT, the one and only female GOAT, and peace, love, and happiness, guys. I really enjoyed today's session as much as it started with a fuss, but we okay. we okay. So if y'all have any other questions, let us drop them under the Telegram group. Peace out.